If any recording or any journalizing that's not the end of the period, we are not count as adjusting entry. Okay? Now, the main purpose of adjusting entry is that in order to adjust the remaining balance of some account to be correct. Okay, so that will be shown in the financial statement, which is could be said that this is your report for your operating performance of your companies to be the right amount as well. In adjusting entry, they consist of adjusting existing accounts or correct the errors, including record the revenue or expense. Okay, we'll see in our slide very shortly. Adjusting entry will record the journal at the end of the period, of course. They are going to record onto the journal as well. They will be posted to ledgers and calculating the adjusted balance. What do I mean by this? I would say that you can see here. When you do the accounting cycle, first step, second, third, fourth, when you do adjusting entry, you are going to record onto the journal, and then you repeat here again, posting to ledgers. Once you posting to ledgers, you can direct to adjusted trial balance because you already adjusted. But number 4 here, step number 4, this is unadjusted because you haven't recorded any adjusting entry yet. But once you record onto the journal, post to ledgers, which is calculating of the new ending balance, then you have the adjusted trial balance. And after that, you're going to have the financial statement and so and so. Okay? Now, the thing is that there are 8 types of adjusting entry. In the past, we normally mention only 5 of them. But afterward, thereafter, they are going to have some discussion about the remaining 3. So we just amended our outline to show you all the 8 types of adjusting entry. Okay? In other words, I could say that if any transaction related to one of these, we could say that is your adjusting entry. Okay? You can see that receivable, payable, prepaid expense, unearned service revenue, supply use, provision to impairment loss, depreciation, and urban correction. Okay? 8 of them. The first one begin now. This is your first one, receivable. What is receivable? Receivable means you already received the revenue. You know it. You already realize that there is a revenue increase. You get the revenue, but you haven't collected your cash from the revenue yet. Okay? Some people say that, well, what about receivable? For example, interest receivable from the bank. You should receive interest today, but you haven't. The bank will pay you by the end of the month, for example. Okay? But you know that today you could earn your interest, but you haven't get paid yet. Okay? That's the example of receivable. It could be interest receivable. It could be normally we usually see the interest receivable. We could see dividend receivable as well. We could see rental receivable. not very often, but we could see, we can see on that. Some people say that what the difference between receivable and account receivable. Some people used to ask me, what the difference between receivable and account receivable? I would say that the main concept is the same thing, because if you consider the account receivable is similar to what the definition of receivable is. The account receivable means you provide the services for the customer, but you haven't collected the money from the customer yet. Once you provide the services for the customer, of course, service has been provided, you get the service revenue. The revenue will increase, but you haven't collect cash from the customer yet. Both of them are, of course, assets. I would say that the receivable is a big umbrella of account receivable. Under receivable, you may have interest receivable, something like this. Is it a big umbrella of that? Because they are the same concept. Okay? Right. Let's see the first example. We normally see about the interest receivable from the bank. Let's say the same thing as example 1. On the 1st of January 2008, KLM Company Limited deposit 100,000 baht to the bank with the interest rate of 6% per annum. PA means per annum, per year. Assume that this is a simple interest paid annually on 31st of December each year. What do we mean by simple interest? It's made paid once. The simple interest, not mean the compounding interest. The single interest means interest on principal. Okay. Record the journal if the firm adjusted entry every month. Adjusted every month. What do I mean by this? Well, if I draw the timeline, this is my timeline. Okay? And the timeline is that this is the 1st of January 2008. This is, let's say that this is the 31st of December 2008. Now, the day that you receive the interest from the bank is today. The 1st of January, the beginning of the year, you deposit 100,000 to the bank. But you have to take it out from your copies. How do I record the journal on the 1st of January 2008? If I record the journal, I'm going to record as I'm going to use the short version. No need to use the journal formatting. I'm going to have the debit bank deposit 100,000 and credit cash out of the company. Okay, so it means that the bank deposit will be increased on my bank account, but the amount of cash in my company will be reduced. Okay. Now, what next? The question asks you to record the adjusting entry every month. So the the end of the month. So every month is the end of the month when you can record adjusting entry. Is that correct? So the first day that you need to record adjusting entry is 31st of January. I try to write down the adjusting entry in red. Okay. Now, how are you going to record adjusting entry here? On this day, you're supposed to receive the interest, but not yet. When are you going to receive the interest? 31st of December. Now it's 31st of January, the first month. So, on this day, you should receive the interest, but you haven't. It means you should receive the interest, which is your interest receivable. This is your asset, and you credit your revenue, because the interest from the bank is your revenue. We call interest revenue. Now, the next question is that how much I have to put it here onto the journal. Some people say, but well, if you don't like to record the journal in an informal way like this, you can still use the format, the formal format, as you get used to it, and then you put it onto the format without any problem. Now, how much we have to put it here? You can see this period. This covering for only 1 month, correct? So 1 month, this is your interest rate, 6% per year. Principal, 100,000. So if you calculate that, this is 6%, can I write down something like this? 6 over 100 times 100,000. This is for 1 year, but this is just only 1 month. So I count 1 divided by 12. How much is that? I got 500. I put 500 here. Okay. Now, at this stage, I show you the T account, or in other words, this is your ledgers. Let's say this is your bank deposit. This is your cash. This is your interest receivable. And the last one is your interest revenue. Now, can you posting what you record onto your journal onto these 4 ledgers for me? First, you have your bank deposit, 100,000. You have credit cash because you have to take the cash out of your companies. You get 500 here and 500 here. Okay. Now, next question is that when is your next adjusting entry to be recorded? 28th of February, correct? Every month means you have to record by the end of each month. So, another 1 month. How can I record adjusting entry on 28th of February? Would it be the same? Yes. Because the end of February, you should have received the interest, but you haven't. When are you going to receive it? By the end of the year. So therefore, you should have received the interest, which is your interest receivable. Of course, you have your revenue increase, which is your interest revenue. How much is going to be? So you can see the highlight period is 1 month. We are already calculated for 1 month. We have 500 there. Can you post it to the ledgers available? Yes. You have another one here and another one here. Okay. Now you can see something. Or someone may say, I haven't seen anything yet. Now, next one. When is going to be your next recording adjusting entry? 31st of March. Okay, the end of the year. The end of the month. Now, 31st of March, you should have received the interest, but you haven't. Okay, how are you going to record adjusting entry? The same thing, and the same amount as well. Because this period is 1 month. You will record the same thing. I put it here. Debit interest receivable. In other words, you should receive the interest today, 500 baht, but haven't yet. But you create your revenue already. Can you post it to your T account? Yes, it will be 500. Now, my question is that how many times you have to record adjusting entry in this example? 12. The last time you record adjusting entry is this one. Okay? And then your T account, there will be interest receivable and interest revenue. There will be 512 times. Okay? And by the end of 31st of December, you get here how much? 6,000. And here 6,000. Every time you record adjusting entry every month, then make you 12 times. 12 times. Okay? Now, last one before we move on. On this day, of course, you have to record the last adjusting entry. I write down very quickly here for you 500 and credit your interest revenue another 500. Now, my question is that on 31st of December is the day that you receive your interest from the bank. How can you record into the journal? How can you record into the journal? Debit what and credit what? Now, I will show you if you have some doubt, how are you going to record here? Okay? Well, it should be 6,000 definitely. because the bank will pay you the total amount of your interest. This is what I usually teach my students. I say that, okay, by the end of the year, the thing that you want is how much you will have at the end of the period in your bank account. You are going to have 6,000 added on as your interest. Therefore, in the bank account, you will have 106,000 at the end of the period, at the end of the year. Is that correct? Because we have plus interest. The interest revenue must be shown as 6,000. This is what you intended to have at the end of the year. And interest receivable, it needs to be 0 because you get paid now from the interest. How are you going to record onto the journal? You can see for the bank deposit here, how much you are going to put it in your T account in order to have the ending balance of 106,000. You are going to have, you put 6,000 here. You are going to put 6,000 on the credit in order to make the interest receivable to be 0 because debit 6,000. Sorry, I need to put it here. Debit 6,000, increase 6,000, decrease 6,000, that's fine. It's 0. And interest revenue is already done. You get that. Of course, here is your bank deposit and your interest receivable. This is what you are going to record on your journal. Some people say that what is the reason we need to use this T account? I would say that up to you. Some people may say this is useless. We can think about by yourself that you are going to record it like that. But for me, if you have no idea how to put the record this one onto your journal, please know the T account and try to think about it, what you intending to have at the end of the channel, at the end of the process. That is the ending balance of this T account. And then once you know that what you need, you can put it in order to have that into your journal. This one is something like, some people say that, well, posting to your ledgers is the step after you record onto your journal. But this one I just, first of all, just would like to calculate it. This will have more picture of how you are going to record onto your journal. Okay, this is the first example. Some of you may say, well, you still confused about that. Let's do the other one. The second one. The second one is remain the same thing, but they share the record the journal adjusting entry every quarter instead. So every quarter you need to record adjusting entry. If I draw the timeline, that will be the same. This is the 1st of January 2008. This is the end of the year XN. Now, this one, 1st of January, I will record the same thing. This is your bank account, bank deposit, 100,000, and you credit cash because you are going to take cash from your companies. Okay. Now, what is not what is. When is the first adjusting entry in this one? The first quarter. They said every quarter, so you have to record by the end of first quarter. Where about? Here. 31st of March. How are you going to record adjusting entry? Same as before. On this date, you should have received interest, but you haven't. So once you should have received, this is your interest receivable, and credit your interest revenue. Now, how much you are going to record here? How much you are going to record here? Again, 6%, 100,000. Quarter, 3 months. So it's going to be 1,500. This period, right? Here we are. So this is 1,500. Now, that's it. Can you draw the tear cup for me? Can I use just only 2 of them? Now this is 1,500, this is 1,500. So your next adjusting entry will be the ending of second quarter. When is your second of quarter? It's the 30th of June. 30th of June. Okay. How are you going to record adjusting entry? The same thing. Okay, because on this day, you should have received the interest, but you haven't. So record adjusting entry should be the same as the end of first quarter. Debit interest receivable and credit interest revenue. How much? Say 1,500, because this period exactly 3 months. Now, when is your next adjusting entry to be recorded? Here is 30th of September, correct? And the 30th of September, you are going to record the same thing as well, with the same amount, right? And the last one will be 31st of December. We will record the same thing. Okay? So, in our T account, both of interest receivable and interest revenue, you are going to have 1,500 4 times. Correct? Now 4 times. How much is it? This is 6,000, and this is another 6,000. Okay. Now, on this day, the end of the year, the bank pay you the interest. the bank pay you the interest, how are you going to record it onto the journal? You debit, you receive cash, credit directly onto your bank account. You could have your bank deposit to be increased 6,000, and credit, you don't need to credit interest revenue anymore because you gradually recognize, or in other words, you gradually recorded every quarter already for your revenue. And this month you receive cash back to your bank account, so no more interest receivable. This will be reduced 6,000. So basically, after you record this one, there will be no more interest receivable because you get paid from the bank. You are already get paid from the bank. Okay? So you can see here, this is your asset. So asset, debit asset is mean increase, but credit asset mean decreasing. So increase and decrease will be cancelled out to be zero. Okay, this is something about the adjusting entry. Okay, now let's see the third example. The third example, remain the same information, okay, remain the same information, but now we change the period of adjusting entry to be every year end. Because the end of the year, we don't know the information that how long you are going to put the deposit onto the bank, okay? And the bank, of course, will promise you to pay the interest every year for sure. Okay, right. Now, how are you going to record adjusting entry in this case? If I draw the timeline for you again, but because this one is slightly different from the previous two. Okay, this is the 1st of January 2008, for example. No, this is May, not January. Okay, this is totally different for sure. Now, this one forever, because we don't know how long you are going to put your money into this bank. Okay, now 1st of May, you deposit the money onto the bank, the same record if you have, this is your bank deposit, 100,000. And then you credit cash because you have to take cash out of your company. By the way, this one is not your adjusting entry. The reason is that this is the beginning of the period. It's not the end of the period yet. Okay? Right. Now, assume that this is the simple interest paid again but semi-annually on 30 June and 1st of January. What do I mean by this? So the bank paid you twice interest on 30th of June, which is here, and the 1st of January here. This is the day that you receive the interest. And you can see here, they ask you to record adjusting entry every year end. So every year end, Now I cannot change the every year end means 31st of December. Okay, now this one is quite a little bit complicated in comparison to the previous two. Every year end. This one means 31st of December each year. Now, what's happened on 30th of June? You receive interest. Is that correct? Okay. Now, how are you going to record into the journal? Now, my question is that first, how are you going to record the journal on 30th of June? Second question is that is your journalizing on 30th of June can be said as adjusting entry or not? Let's see what's happened first. You receive the interest due to this information. Okay? Once you receive, let's say that you receive cash, you can debit bank deposit, or you can debit cash fine or payment if you receive cash, directly cash as the interest, and credit your interest revenue. Why do I need to put interest revenue? Because this one is I receive the interest from the bank. It can categorize as the revenue from our companies. I receive from the bank the interest. Now, how much do I have to put it here? How much I have to put it here? Can you calculate it? If you calculate it, 6%, same amount, but you have to consider this highlight period. How many months? 1 month or 2 months? 2 months. Is 2 months? 2 months time will be 2 divided by 12. So this will be 1,000. Therefore, on 30th of June, you are going to receive the interest 1,000. So this one is not your adjusting entry because they ask you to record adjusting entry every year end. This is not year end yet. This is just the normal transaction. Okay? Now, the year end is here. Basically, what you record until I'm not going to say like that. Okay, the year end, 31st of December, you have to record adjusting entry following the question. Until this day, you should have received the interest, but you haven't because you have to go for the countdown first, and after the midnight, then 1st of January in the following morning, you are going to receive the interest debit directly onto your bank account. So on this day, you record that you should have received the interest as debit interest receivable and credit interest revenue. You haven't get that. You haven't get paid yet. Okay. how much I have to put here. Now you have to consider this period. How many months? How many months of this? It's July. Okay, I put it here. July, August, September, October, November, December, 6 months. So 6 months, you calculate the same thing here. So six months is 3,000. Is that correct? 6 months, 3,000. This is on 31st of December. Now, the following day, 1st of January, you receive the interest from the bank. So you are going to record it as debit bank deposit. Or if you prefer to debit cash, fine, no problem, because you receive cash as the company anyway. Okay, how much? 3,000? Oh, what the hell of this one? I'm nearly finished. Come on. Okay. And credit what? You don't need to credit interest revenue because you already realized or recorded already here. So now you receive it, you have to get your interest receivable to be 0. Okay, it's going to be like this. Some people may wonder that why I write it like this, bank deposit or cash. Basically, bank deposit and cash very similar, because nowadays you can see with your bank deposit you get your one-off mobile phone and then you can scan every shop in order to get paid. Okay, that's directly debit from your bank account. Normally in accounting we call that the bank deposit is cash equivalent. It's not cash, it's not a real cash, but it is referred as a cash equivalent. The best example is that when you take your mobile phone and then scan for the PromptPay or transfer your money from your bank account to another, it's the same thing. Okay, right. Now, this is your first adjusting entry. It's going to be look like this. Okay. The first one has been passed. We have the remaining 7 to be seen, but not this, not today. Okay, I'm going to stop here because this is if I begin the next adjusting entry, of course, most of you will be out of control on your mind. The second is that it's going to be not completed. It would be nice to complete each one rather than stay part of it. Okay, right. Now, we see you next week. And next week we are back to the morning class as usual. But I promise you, should be tonight, this evening, or maybe the latest tomorrow, I'm going to post you the homework. I show you the homework already, and I will give you a time. Let's say 1 week or 10 days in order to submit the homework. So it's not going to be this before midnight tonight. Okay. So if there is no question, no further question, so we'll see you next week in the morning class. Yes. Right side here is an empty screen. Okay, here. Right. That's it. That's the end of the class. Thanks for joining. See you next week.